Hello, I'm Olivia Agar, and this is Mecado's Grain Market Insights Update for Q4 2020, brought to you by Nutrient Ag Solutions. It's been a bumper harvest for the East Coast, which depressed prices for a while as yields were higher than expected. The big moves in production were in New South Wales, of course, where production expectations are 485% higher than last season, and also Victoria with a 31% gain. Though national production isn't quite anticipated to reach a record though, coming in at 31 million tonnes, which is sitting just 2% behind the 2016-17 season. But over in WA, wheat production is tipped to come in 15% below 2016-17, so we can see why the national record isn't expected to be broken. It wasn't all smooth sailing for harvest though. The heavy rain up and down the east coast over the Christmas New Year period was annoying for the southern grain harvest and did cause some delays, but the timing was pretty good for most grain growers, with much of the harvest in the bin, and now silos and bunkers are being filled to the seams. Many producers in those drought-ravaged parts of southern Queensland and New South Wales have also hit record yields. Onto the price front, and they were trending down for most of the last 3 months due to harvest pressure, but local prices have improved with some help from international markets. This chart shows the Chicago Board of Trade soft red winter wheat contract in Australian dollars per metric tonne in orange, and ASX wheat futures, which is Eastern Australian, in the green. We can see a weakening US dollar has helped drive the CBOT contract higher, as that means US wheat becomes more competitive on the international market, and those rising US prices are positive for Australian wheat values, but some of the rise has been negated by the strong Aussie dollar. But it's the basis that's the important component to take in here, which is the broken line on the right-hand axis, and it's the difference between the futures price and the physical grain price, so it's influenced by Australian supply and demand. And while the strong international futures price was pulling up prices here and making for a strong basis, the local prices haven't been able to keep up that momentum, and so we've seen a return to weaker basis since then. What has been driving international prices up? Well, Russia's imposed a tariff on exports in an effort to stop food inflation, which has thrown demand to other major exporters, including Australia, with their increase in price coming from there. And so for our growers, it's an unexpected gift and will help shift this massive Aussie crop we have. And the other factor in the grain market has been China's buying activity. They have been buying huge amounts of corn and soybeans to meet feed demand and build up their reserves. So China's imports of coarse grains for 2020-21 are forecast at 32 million tonnes, which is even higher than the 25.7 million tonne imported in 2014-15 when imports spiked due to strong prices in the domestic market. With lots of feed grain taken by China, it's driven other export destinations to really ramp up their purchasing activity as well, trying to secure some grain. So the wheat market has been riding on the coattails of corn and soy. There's some highlights on the grain market for you. If you're looking for any more insights from Mecado, head to our website or listen to our podcast, Commodity Conversations.